Hi everyone, welcome to my channel Nifty Options Hedging with Ravi. I'm K. Ravi Kumar. Through this channel, I am going to post some of the videos and opportunities related to options hedging strategies. I will try to find out opportunities in Nifty, Bank Nifty, and various other stock options. Before going into the actual strategy, standard disclaimer, the views are based on my personal opinion and for only educational purpose. Please consult your financial advisor before taking any position. Now let's get started with the actual strategy. The strategy which I am going to explain is Nifty Broken Wing Butterfly strategy. This strategy I am explaining you for the month of April expiry. On Friday, Nifty futures closed at 14,622. I am taking a futures price because generally the options will be deriving their value based on the futures value. If you see SGX Nifty, the replica of Nifty which is trading in Singapore, even though it's a holiday in India, SGX Nifty is trading even today. If you see currently SGX Nifty trading around 14,732. That means there is some gap up opening expected to happen tomorrow unless until overnight if the value changes. But if you see the COVID cases are rising very rapidly, but if you think there is a chance of market falling or consolidating, and if your view is bearish, in that kind of cases, you can go for this particular strategy. So what is the broken butterfly strategy or how we can able to form? Even if you don't know this or if you haven't heard this, no need to worry. Once you see the actual strategy or actual strike prices, you will automatically understand what we are trying to do. In the next slide, I am going to explain the payoff diagram also, so that you will see exactly what is the risk, reward and return in this scenario. So how we can able to form this strategy? I am talking about selling two lots of 14,300 put option, and we are buying one lot of 14,700 put option. 14,700 put option is trading at 374 and 14,300 put options are trading at 215. And along with that, I am also going to take one of the other put option which is little bit having lesser premium, that is a 14,100 put option which is having a 156 points premium. If you see effectively, when you are starting this trade, initially you are starting with some debit. What is the debit in this scenario? That I will explain now. Okay, if you see now 14,700 put option, in order to buy this, we are paying a 374 points premium. Along with that, we are paying 156 points premium in order to buy 14,100 put option. So these are the two buy positions we are having. For that, we are paying close to 530 points. That is based on the today's data. Today is closed, so tomorrow when market opens, these premiums will change. But it's okay. The strategy wise it will remain same. Even though the numbers change, you can able to still take a similar strategy. The final values may vary, but of course, if one of the value goes down, all the other values also will go down, because if the Nifty goes up, these are all put options, so all of them will lose its value. So it should not make too much of a difference, even if the market opens up tomorrow and the option premiums will go down. Overall, the strategy looks similar. So now 530 points we are paying in order to buy these two positions. But when you see on the sell position side, we are selling 215 worth of two put options. That means effectively we are receiving 430 points. 530 points is our outflow and 430 points is our inflow. That means effectively what is the maximum risk in this scenario we are having? The maximum risk we are having is only 100 points. So 100 points into 75 is the lot size. That means maximum risk in this scenario will be 7500. In order to understand when this trade will be profitable and what kind of risk reward you are going to have, that I will explain with the payoff diagram. Before going further, if you like the strategy which I am explaining, if you want to learn more this kind of strategies and opportunities, Please subscribe to my channel and share to your friends. Now let me explain you the payoff diagram. If you see in this scenario, the maximum profitable point you can see that is happening at 14,300. See, when in case if Nifty closes at 14,300, what is going to happen? Your 14,700 call option value will be 400. 14,300 put option, 14,100 put option, they all will become 0. But when we started the strategy, we are at a minus 100 because that is the net outflow. That means effectively your maximum return will be what? 300 points into 75, that is 22,500 will be the maximum return you are going to have in this scenario. In case if it goes down, what is going to happen? As it keep on falling further, 14,300 to 14,100, for example, if you see here, your profit is reducing from 22,500 to it is going all the way up to 7,500. But after that, any point it goes doesn't matter. Your profit will be remaining as 7,500. Whereas on the upside, what is happening? From 14,300 to 14,600, the profit is reducing. Once it reaches 14,600, you will be in a position of zero profit, zero loss kind of scenario. Of course, I'm not considering the brokerage. That will be add-on which you need to consider. When you talk about the maximum loss, when it is going to happen? Once the Nifty closes at 14,700 or above, at the end of expiry, if Nifty closes any point at 14,700 or above, automatically your loss will be capped at 7,500. So maximum loss is 7,500, maximum reward is 22,500. That's why the reward to risk is 3:1, which is a very good reward to risk ratio, because if your V is bearish, then automatically you are expecting that okay, Nifty to close below 14,600 or any other price, because in fact the current market price of Nifty is only 14,500. If Nifty closes even at the same price also at the end of expiry, still you can be in the profit. But of course, if Nifty goes above, then like I mentioned, you will have a maximum risk of 7,500. So this is called broken wing butterfly strategy. For the people who are thinking, okay, I'm not bearish on the market, I am bullish on the market, you can try to go for a similar strategy on the upside also. Instead of using the put options, you can try to go for the call options. So if you have any queries on this strategy, or if you want me to explain any other strategy, please post in the comments. I will try to check a useful opportunity. Accordingly, I will try to come up. So I will try to post on a daily basis whenever I find opportunity, mostly in the Nifty, Bank Nifty, and various stock options. So please subscribe to my channel to get a regular update, and you can see various opportunities in the market, and you can plan your strategies accordingly. Thanks for watching.